Good afternoon, friends. To the topic which has been assigned to me, I am Pradip Modi, practicing chartered accountant in Ahmedabad and having about more than 37 years of experience in the field of the international taxations, cross-border merger acquisitions, and specialization in GIFT City IFSC work. Friends, today the topic is very interesting, and this topic will certainly create some sort of the interest among the fraternity because it's a very developing area in terms of the practices, and the future is GIFT City, and more particularly in GIFT City, the IFSC. That is the most promising field in our coming days, which is the mixture of the Foreign Exchange Management Act as well as the International Financial Services Center authorities. They are dealing with this kind of the topic. Friends, very important part is to understand that how this GIFT City has been formed and what is the use of this GIFT City, because it's a unique concept developed in India. Of course, this kind of the concept is already been there prevailing across the globe. You can take the example of Singapore, Dubai, London, New York. These are the various places where these financial centers are already been developed. As the India is progressing fast and we would like to have the access to the global financial market as well as the global financial business, we have created this gateway for the purpose of reaching out to the global community as well as the geographically, you may say it is 100% convertibility kind of things in this area. As you know, friends, the foreign exchange is a scare for us. Today, somewhere we are ranging between the 600 billion to 700 billion reserves in India, which is not that great sufficient to give the 100% convertibility in foreign exchange. And therefore, it is believed that the foreign exchange is the property of the government of India. And therefore, as and when we received it, we have to hand over this earning foreign exchange to the government of India. And therefore, we are not in a position to give the 100% convertibility. So we have a capital account and the current account kind of a situation in India. The capital account transactions and current account transactions, we will deal later on very briefly, because that is not the subject of today's topic, but to the relevance, we will touch upon that particular aspects of current account and capital account transactions. So before we proceed, friends, I would like to give you the overview of the GIFT City, friends. So this is the geographical areas where we are able to do the business. As you know, friends, this is the Gujarat International Finance Tax City. The full form of the GIFT City is Gujarat International Finance and Tax City. So there is a combination of the finance as well as the technology in this city, and which is considered as the hub of or gateway of the global business, that is the financial business, and transforming the India's financial and technology landscape, friends. From this place, the lot of regulations have been changed, regulatory authority have been changed, and many more things has been changed. So just give you a brief idea about it. This is the geographical area located near to the Ahmedabad. From Ahmedabad, it is about some 30 to 35 kilometers this place. So well connected by air, by railway. The railway is reaching up to the Gandhinagar. Gandhinagar, there is no airport. But from airport, it is about some 12 kilometers, 13 kilometers straight, you can reach to the GIFT City. GIFT City is a geographical area where the total area has been first of all demarcated or carved out as the SEZ area, friends. And that SEZ area further been carved out in terms of the functions. Physically, it is not further divided into the two parts, that is the SEZ area and IFSC area. So you may find sometimes in GIFT City itself that in one building, one office may be located doing the work of SEZ, and second is doing work related to a IFSCA. The most important part we have to remember, we are day in and day out answering to the queries that whether we can do any import export activity by having an office in this area, can we do any kind of the merchant trading while sitting in this area? Answer is no, friends. We have to remember that this is the area where only the financial services or financial product are dealt with. So this is nothing but only a service SEZ area. There is no physical manufacturing happening, nothing, no assembling is happening. It is purely a financial product is dealt in this area. Only financial services are dealt in this area. And more precisely as a chartered accountant, friends, we understand that this is only an export of services and financial product. So this will give a clear idea. First of all, you have to identify that whether the services which has been given to you to evaluate for the purpose of the proposal, whether it is a financial services. Answer is yes. Then further evaluate whether it is dealing in exports. Then answer is yes. Then you can choose these destinations. So unless you are not confident about it, that whether the export of these things will be happen, that's the only financial service and financial product, the possibility of having an office in these jurisdictions is not been considered as a valid one. The second option is that this is an offshore kind of things. Offshore in the sense that the foreign companies, foreign entities, foreign individuals, foreigners or NRIs, they can have their presence in these jurisdictions because these jurisdictions is dealing in a foreign currency. It is not dealing in a INR. The INR account is only being allowed you to open in this area, which is called a SNRR. That is the special non-resident recurring kind of things, only expenses which are happening to you are possible to be discharged with the help of the INR. Otherwise, there is no dealing of rupees in these jurisdictions. The valid foreign currency, yen, then sterling pound, Singapore dollar, or US dollar, all these are the allowable currency to deal in this area. So it is totally a foreign currency dealing area, and therefore I am saying you, in a limited purpose, it is known as 100% convertible areas, because here convertibility of the currency is happening in this area without going again to get the permission from the Reserve Bank of India or AD. So now the important part is that without getting or seeking any permission in these jurisdictions, you can do, it is 100% convertible foreign currency area geographically, you may say. The total size of area of this city, friends, that is the GIFT city, is about some 3,300 acres, and having a 625 acres is marked for domestic tariff area, and 261 acres is marked as SEZ and IFSC. The balance area is making use of the all the service utilities or public utilities, or for the purpose of the education, for the purpose of the shopping centers, for the purpose of the hospitals and educations. So the balance area can be, so this is a very, the first smart city, you may say, developed in India, having a this kind of the exposure. So in the same area, you will find all the facilities, all the amenities and everything. At the same time, you will find a business of which are dealing with the overseas entity, or overseas entities are coming here and doing the business. That is the stop of the foreign investment activities in India. You can make a utilization of these jurisdictions. So this is the GIFT city, which is located near to the Ahmedabad and most proximity to Gandhinagar, friends. It's about 20 minutes from the airport, 15 minutes from the bullet stations, and national highway very near to there. So all these are the physical, the approximity has been given, and all proximity I'm giving you to understand that this is the real pictures of the GIFT city, where the couple of buildings are already been there. They are functional, they are working. As on today in this jurisdiction, friends, more than about some 12 to 13,000 employees are working day in and day out. and it's now becoming a more business friendly hub for doing all the businesses. And you name any top notch banking institutions, you name any big financial institutions, they are having their presence in this particular area. Their infrastructure facilities are definitely like a smart city. There is a zero discharge of the water. There is no physical movement of the wastage. It is going by automatic all tunnels. There is a automatic cooling systems across all the buildings. So there is no the AC machine you will find outside the offices or the residence. It's totally a district having a cooling innovation systems across the GIFT city, friends, and it's a hub of the doing a business. Only the limited the allowability in this area is that those persons who wanted to establish the IFSC office or SEZ office in this area from the domestic area, they are allowed to carry out the assignment, and that assignment you can do in INR, and to that extent only domestic activities you may say it is permissible. The service providers may be providing services in these jurisdictions will be paid in INR for the recurring expenses. The salary can be paid in a rupees expenses, but all the trades, all the businesses, all the transactions are happening in a foreign currency. So this is nothing but it is India's gateway to the global finance, friends. And there are various sectors. I will come in detail for each sectors to give you an understanding, friends. The various new age and future driven entities are there having a presence in this GIFT city area, friends. The banking institutions, about more than some 22 banking institutions, that is the IBU, that is international banking units, are there in these jurisdictions. The insurance regulatories are also working very hard in these jurisdictions. Of course, now it is subsumed in a IFSC. I will come explain you. But insurance and reinsurance business is happening in this area for a global transactions. The capital market transactions are also happening. There are two exchanges in this area. One has been established by National Stock Exchange. Other one has been established by Bombay Stock Exchange. So there are two exchanges already been doing a business, and Nifty has been started. It is moved from Singapore. So that is the biggest attractions of doing the business in this jurisdiction. So capital market is also booming in this area. Lot of capital market brokers are having their offices. They are doing the businesses. Then one more area which has been allowed to do the business is a leasing and finance of aircraft and ship. It is not that the cargo movement or cargo contracts are being executed in this area. Only the leasing and financing of aircraft and ship are being allowed in this specific in this IFSC area, friends. Then fintech and techfin, very interesting area, because as you know, friends, the name itself, when it has been established, it is said that Gujarat, it's a Gujarat International Finance Tech City. That's why it's a GIFT city. So finance and technology both are to be presented in this particular jurisdiction, and therefore this framework of the fintech and techfin are very, very useful. It promotes the innovations, it promotes the ideas. You can test there, you can develop your ideas, you can develop your business, provided you have the customers outside India. You can develop that idea and you cannot cater into the domestic market. That is the limitations. So many inquiries are come, sir. We are having a good technology. We have that capability of doing the India as well as outside India. I say that India, you just leave it out of your business portfolio and do only the outside business, then it is a permissible activity in these jurisdictions. Then alternate investment funds, friends, we will come later on that EIF 1, 2, 3 category. There are mutual funds also established in this area. In this area, there are the portfolio management services are also there. Family offices are also there. So alternativity financial management entity concept has been developed in this area. What is the financial management entity? I will explain you later on. The foreign universities are also allowed to have their own campus of studying that. Only the subjects which are related to finance are permissible to get them educated in this particular premises. So this is nothing but a foreign university giving a teaching in these jurisdictions. And ancillary services. Ancillary services means those services which are being used either by the existing unit in this area or proposed units which are likely to come. They can provide the ancillary services. These ancillary services can provide to the overseas entities, those which are not been located in this,
Sir,
but you can provide it. So
do you hear me,
these are
sir?
the few segments which has been given here. I just pause for a minute. Somebody has raised the hand and said that they would like to ask some questions. My only request is that if I can take a question and answers at the end of the sessions, it will be good for me to answer. Otherwise, it will be delayed, because to complete this subject itself for about 2 hours, it's very, very difficult. But I will take one or two questions right now, but I will not answer thereafter. You just note down your questions. I will definitely deal with each and every questions. Even then, after 2 o'clock, I will take it up to 2:30. All the questions we will answer. We will not skip anyone. So don't worry for that. And my contact details are also being shared. So you can contact me later on also. Any your query as a fraternity, I will definitely support to your queries. So somebody has raised the hands, one or two. Abhishek, if you can just make them enable, I will answer first and then we will proceed further.
Okay, sir. Sir, actually, the participants are asking that the slides is not moving. Is it, or sir, the slides are moving, sir? From your side, sir. Please confirm the same.
Lights are not being visible.
Yes, sir. The slide PPT stuck on a slide 2, sir. Page number 2, sir.
Is it now?
Sir, status is same, sir. It stay stuck at the page number 2, sir. Maybe the link is not working in the video,
Slide
sir.
is not being visible.
Yes, sir. The slide stuck at page number 2, sir.
No, it was kept in a static when I was talking. Now it
Okay.
is visible, it is moving.
No, sir. Status is same, sir. An overview for Gift City and click here. The page will be visible. No other link will be opened.
Okay, okay.
Yes, sir.
Let me check. Now,
Yes, sir. Yes, sir. Now it's moving to the page number 3, sir.
okay.
And dear participants, the PPT for the session will be shared at the end of the session. So if you have any query, please read in the chat box and don't raise your hands. We have a Q&A session at the end of the session. You will ask your queries at the end of the session, sir.
So
If you have,
this slide is visible, right? Abhishek,
yes,
I'm
sir.
going ahead.
Yes, sir.
The
Yes, sir.
next slide is
Everything is
visible.
yes, sir. Yes, sir.
Okay, fine.
Yes, sir.
So, friends, now let us come to that is the basic background. I have tried to give you what is the gift city, what are the services, and what are the areas where the offices are functioning in that area, friends. Now, let me give the brief understanding that how this area is being regulated. This area is being regulated by creating a separate act, friends, and which is called a IFSC Act 2019, comprises of 34 sections and 2 schedules. Very easy to look at the all the sections which has been created in this IFSC, and basically the power has been given and they have been notified as the unified regulator. The word unified regulator, it means that there are 4 different authorities who are currently regulating the various kind of the businesses. The financial businesses are now being subsumed, that is merged in IFSC. So IFSC is subsumed by 4 different regulators of domestic markets. So which are the 4 regulators, friends? One is the Reserve Bank of India. The Reserve Bank of India, all the relevant powers are being given to IFSC for regulating the business in these jurisdictions. Therefore, you need not have to go for permission time and again for doing any business of making a overseas investments or making a domestic investments to the Reserve Bank of India. And IFSC itself is a competent to formalize their rules and regulations. And therefore, all the powers of RBI is subsumed in a unified regulator, which is called a IFSCA. That is the International Financial Services Center Authority. So IFSC authority has been created and they are holding the power of the RBI for controlling and regulating the foreign currency transactions. The second is a security, that is the SEBI. Now, Security Exchange Board of India, that is the SEBI, these powers are being given to the IFSCA for the purpose of the transactions related to the securities and securities contract. So IFSC is holding the power of the RBI. The second authority, domestic authority's power is a SEBI. It is also been held by them. The third authority is related to the insurance. So insurance regulatory authority, their power is also been given in these jurisdictions to the IFSCA. And fourth is the Provident Fund Regulatory Authority. Their power are also been given to the IFSC. So there are four authorities currently regulating a various financial transactions or financial activities. Their powers are given under the one authority, and that authority is a unique authority, and therefore it is called a unified regulatory authority, which is known as IFSCA. And they have formulated, the government has created the act in the parliament, and that act is now being regulating all the activities geographically in this area is being regulated by IFSCA. IFSC is from time to time issuing the regulations, they are issuing the circulars, they are issuing the notifications, they are issuing the press notes for the purpose of the supervision and control. And when you are reading only act, it will not be sufficient. You have to read the regulations, you have to read the circulars, you have to read the notifications. Their website is extremely friendly website, friends. Very friendly website they have created. The segment wise, the topic wise, you may find the notification. It is not just like the RBI. RBI has to come out with the master directions time and again every year. Here there is no need of coming out that, because there is a segmentation has already been created, and therefore you can see from the website the relevant notification circular under the one head, and that will be helpful to you. So this is how the IFSCA is functioning, friends. The next is, it is related to that section 3 of IFSCA, friends, that gives the power and understanding to you that appropriate regulator means it is the regulator who has been given a full authority as unified regulator, and it says that a financial sector regulator is specified in first schedule to this act. So we will go to the first schedule and we will say that appropriate regulator. For example, appropriate regulator in terms of the stock exchange regulations, and they are in domestic market, it is the SEBI, and therefore appropriate regulator will be a SEBI. In case of a insurance, it is the insurance regulatory authorities, that is the appropriate authority. So that is given in a schedule 1, friends. We will come and how it is subsumed. The financial institution definition has also been given. So it's a academic things, but just you have to remember that it is international financial services centers which are engaged in rendering financial services in respect of the financial product. So financial product is the basis of these jurisdictions. You need to identify, for example, somebody has come to us and they said that whether I may establish my office or not. So first important task one has to perform is that whether it is a financial product or not, because financial services in respect of the financial product are permitted, and therefore you need to examine and determine that whether it is a financial product or not. And once it is been there, then financial services you can render it. So in this context, when financial product has been defined in section 3(1)(d), which says that security is contract of insurance, deposit, credit arrangement, foreign currency contract, or any other instrument notified by government. These are all financial products. And these financial products are one or more category of the various, the colloquial products, what we say is subsumed in this. So we need to understand this, and based on this, the services are rendered, which is known as financial services. They are permissible. Like which kind of the services you can provide. For example, somebody is dealing in a derivatives. So derivatives is a product. Now derivatives, what you do is that the buying and selling or subscribing to a financial product, agreeing to do so, that is the services. So these services you can provide. So as a capital market intermediaries, you are giving a services to yourself, that is the your principal and you are your client. You can do it, or you can provide the services to the outside world, and that is also permissible, but it should be a financial services. Acceptance of deposit, if you are accepting deposit in this jurisdiction, it is a financial services. So various services are also being defined, friends, and we have to examine this. More popularly known products are currently we are dealing, so there is no such the interpretation is required. Friends, interpretations what we do in our income tax or GST or any other law, that interpretation need not be required in these jurisdictions in detail, because they are dealing in a simplified manner, and therefore there is no comma, there is no full stop, there is no such thing, and therefore we interpret like no. That is not the correct way, because when we are dealing in FEMA, we have to do a not literal interpretations, but it is a purposive interpretation we have to do. So similarly here, when we are dealing with IFSCA, we did not have to do the literal interpretations, we have to do the purposive interpretations, and therefore all these are the definitions for giving you a basic understanding. It may be enlarged, it may be contract, it is depending on the kind of the thing. So therefore you can read this, but not necessarily it is limited to this. You can expand it or you can contract it, friends. The one more important sections of IFSCA Act is section 12, friends, where the section 12 is related to that to develop any kind of the new financial product, new financial services. IFSC is an authorized to do that. So this is nothing but the authority is given to IFSCA to accept a new product. For example, friends, recently they are having a one paper for the public comments related to TACFIN products. Now TACFIN products is where it is a developing. It is not that somewhere it is defined and we pick up that product and then. So what is the TACFIN and what is the FinTech product? It has been defined by them. They are trying to make it more and more people to be attracted in jurisdiction. Therefore, they publish one paper. Now that based on the opinion, public opinion, they will formulate a new product. And new product again will be given as the permission or tradable or doable activity in this jurisdiction. That power is conferred under section 12 of the IFSCA, friends, to the authority. So what is permissible or what not is permissible, what is the power and function of authority is given in a section 12. Section 13, friends, it is again related to a power and functions of the authority. But what is important is that you will not find that what is the penalty if it is not being complied with, or what is the about the compounding process, or what else is not been prescribed here. Then parent acts, whatever has been prescribed, that can be attracted by this authority for the purpose of implementation, for the purpose of the punishment, for the purpose of barring somebody from doing that activity. So section 13 making a authorized authorities to the IFSCA for doing all these act, friends, and therefore section 13 is important. And last, the important sections in a IFSC Act is the first schedule. The first schedule is, friends, if it is visible, you can see that first schedule is related to a section 3, where we have dealt with section 3 is related to financial product and financial services, as we have seen earlier. So they said that in a first schedule, the power of appropriate regulator, you can see the heading. The appropriate regulator is Reserve Bank of India, then it is a Security Exchange Board of India, then the Insurance Regulatory and Development Authority, then the Pension Fund Regulatory and Development Authority. So these are the 4 appropriate authorities. Their powers are being subsumed in a IFSC, and therefore what the powers they are borrowing from this particular act is that name of the acts. So if Reserve Bank of India may be doing a lots of work, but against this, only these are the acts which are given against this in the column 3, that is the RBI Act, Banking Regulation Act, Deposit Insurance Credit and Guarantee Act, Foreign Exchange Management Act. These are being acts regulated by Reserve Bank of India. Now, these are the acts going to be regulated by IFSCA for the entities, for the institutions, for the activities, for the services, for the product which are located in IFSCA. And therefore, this is very important. So, Reserve Bank may be doing so many things, like they are also governing the cooperative sectors. They are also governing the urban banks. They are governing the scheduled banks. So, those are not being given the power to the IFSC to regulate. What is important is these are the important acts which are governed by RBI in a domestic market. The power of these acts are only being held by the IFSCA. So we have to remember that these are the acts. Those powers are being now currently transferred in these jurisdictions on a temporary basis to this for the purpose of the regulating and controlling, supervising the activity in a IFSCA GIFT City jurisdiction. So GIFT City, there are 3. They are also doing a lot of work in a domestic market, but their Securities Contract Regulations, Securities and Exchange Board of India's Act and Deposit Act, these are the only 3 acts under which activity which are done in a domestic market, those activities are permissible to do in a IFSC jurisdictions. For example, you are going to list the securities in this jurisdiction. So listing is again a activity which are permissible in a domestic market. So here listing is done in a exchange where it has been held in a IFSC jurisdiction. So whatever regulations are applicable to the NSE or BSE in a domestic, similar to that, the regulations can be formulated, or some powers are not being explicitly given in a IFSC formulated regulation. They can borrow it from the parent act. So that is the purpose, where something is missing, you can borrow and make a further interpretations or smoothen the transaction, friends. So these are the acts which are permissible in the IFSC. Now, friends, after having a discussion on this particular IFSC, let us come and deal with the FEMA, because ultimately this subject is related to a Foreign Exchange Management Act, and therefore it is very, very imperative for us to understand the Foreign Exchange Management Act, which are the sections applicable in these jurisdictions and what will be the meaning of that, because some of the special changes has been made in our regulations, in our master directions, or in our notifications. It has been brought out that certain activities can be carried out in these jurisdictions which may not be permissible in a domestic market, and therefore we have to understand that which are the provisions which are being amended or appended or modified or deleted. We have to understand that application of the FEMA in this jurisdiction, friends. So there are few concepts which we need to understand. The concept number 1, or the definition number 1, is a capital account transactions, friend. I just briefly touch upon, you know that what is the capital account transaction. I think there is a separate session also. It has been taken by some other faculty. But capital account transactions, I will summarize in a one line that if the assets and liability of the non-resident is affecting by any transactions in India, then it is a capital account transactions. Similar to that, if we are resident in India, any assets or liability located outside India is affected by transacting something, then it is a capital account transactions. So what we understand in our normal understanding of the accounting, that capital account transaction is of an enduring natures or having some life. FEMA has no such concept. FEMA is more concerned, for example, a person who is importing the plant and machinery and making an immediate payment. Then even then the item which is imported is of a capital nature. The transaction cannot be described as the capital nature transactions. But the transactions which are giving, for example, they are giving the liberty to make the payment over a period of 5 years or 3 years. Then in that case, as an importer, we are creating a liability in terms of foreign currency, exposed to the volatility, exposed to the fluctuations, and that liability may affect our foreign exchange. And therefore, over a period of 5 times, it is affecting the transactions, which same transactions of same product, but that will be treated as the capital account transactions. I hope that friends, a given example will make it more clear to you that it is not based on the embedded product, embedded items into the transactions, but it is related more to the creating of the assets or liability. Suppose today I am giving some exports to the outside and amount is receivable immediately. As per the terms, amount should be realized within the 6 months. Now, I am not able to realize the 6 months. I want to sell this for, let us say, receivable over a period of 3 years. Therefore, now the items which are considered as the current items converted into the capital account, because the foreign exchange or foreign currency which are supposed to be receivable from the debtor, it is a deferred over a period of time of 18 months, 25 months or 30 months or 5 years. This will be treated as, friends, the capital account transactions. So capital account transactions is very, very important. We have to understand that, and it has been defined. Current account transactions is a transactions other than the capital account transaction. So those which are not being covered as a capital, it will be treated as the current account transactions. Current account transactions, always you have to refer, friends, those which are specifically permissible transactions. And current account, it means that if it is been prohibited explicitly, then only it is not allowed. Otherwise, all the transactions in current accounts are allowed. Similarly, current account, a capital account, you have to see that whether it is allowed or not. You cannot do blindly that it will be allowed. I need not have to refer it is allowed and what is prohibited. No. It has always been that listed items which are allowed, that will be a capital account, and the others is a current account transaction, friends. After having gone through these, friends, there are a couple of definitions which are important for us to understand that the section 6 is very important, friends. 5 is also very important, current account transaction, which says that any person may sell or draw foreign exchange to or from authorized person if such sale or drawal is a current account transaction, provided that the central government may, in public interest and consultation with Reserve Bank, impose reasonable restrictions for current account transaction as may be prescribed. It means that all the transactions are normally being considered as the current account transactions if it is not creating any assets or liability. But if there is a prohibition, the section 5 says that it is prescribed any restrictions, then in that case, you have to take the permission and enter into the transactions thereafter only, friends. Section 6 is very important, friends. Very, very important, because section 6 permits the person to sell or draw foreign exchange from the authorized person. The difference between these two, friends, under the FEMA is if the transactions you are dealing otherwise than through authorized dealer, then those transactions are not being permissible, friends. And therefore, the concept of authorized person is very important. Why ED apply the PMLA if the transactions are being caught in Angadia? Because the person through whom you are dealing is not an authorized person, it is not an authorized dealer, but you are dealing with him for exchanging of these things, and therefore it covers under the section 3 of the FEMA, and you may be prosecuted by the ED later on. And therefore the concept here is that if either the currency or any other instrument is drawn or sale in foreign exchange through authorized person, then only it is a permissible. And Reserve Bank is also holding some power to formulate the regulations. I am not going that in detail, friends. And power has been withdrawn under the section 6(2) has been now no more operational. The power has been withdrawn by the central government. So in consultation of RBI, they do all activities and which are the permissible, which are not permissible. Important part in is only that the section 4, subsection 4 of 6, a person who is resident in India may hold, own, transfer, invest foreign currency, foreign security or immovable properties situated outside India if such currency, security, property was acquired or held, owned by such person when he was resident outside India. So somebody who was outside India and he is a non-resident, during his non-resident status under the FEMA, if he has acquired some properties, if he is holding some foreign exchange currency, if he is holding the properties, those currencies, those accounts can be held even then he becomes a resident in India. It is explicitly allowed. There is no need to go to the Reserve Bank of India. During his tenure as a non-resident, very explicitly permission is given under 6(4). Similarly, 6(5) the permission is given to a person resident outside India, but when he was in India, for example, somebody who is here for 3 years on job, he has acquired one house, he has some the INR deposits, he has some cash currency, all these he can hold it till he wishes because it is explicitly permissible under section 6(5). So 6(4) and 6(5) is important because when we are dealing with IFSCA, this problem may come, this issue may come, and we will deal accordingly, friends. The most important part is OI regulations, friends. The next important part to understand before the IFSCA is to understand the OI regulations, overseas investment regulations. So, friends, as you know that overseas direct investments, ODI, is a part of OI because OI is nothing but it is a combination of the two items. It is a combination of the two items and OI is comprised of these two items. While ODI is nothing but it is a permissible transactions having some commitment. And that commitment, you know, friends, 400% of the capital worth in case of a non-resident, you can send the money outside India under the LRS up to 2,50,000. So these are the items which are permissible, friends, in our OI regulations. And therefore, it is important to understand that how the OI regulations are affecting to the transactions in IFSCA. When we shall come to the alternate investment fund, this may be helpful to you in understanding that, friends. So OI regulations is very important. They have defined IFSC also in our OI regulations. And as we have discussed, friends, overseas direct investment means by way of the acquisition of the unlisted equity, capital of the foreign entity, subscription to the memorandums, or investment in 10% or more in a paid up equity capital of a listed entity, friends. So these are the important, without this 10%, if you are holding the control, then also it is considered as the ODI, friends. So ODI has 4 transactions. The number one is that you can acquire the unlisted equity, friends. The number two, you can subscribe to the memorandum articles to create your companies overseas. The third, you can hold 10% or more in a listed company. Then it is also a ODI. And four, if you are controlling by board or by some other agreement a company where you are less than 10%, but that transaction is also need to be defined as the ODI. So very important to understand that there are four types of transactions permissible under the ODI, friends. So similarly here the one more aspect which I was talking about is that OI has been defined in 2R, which says that overseas investment or OI investment means financial commitment and overseas portfolio investment by person resident in India. It means that it is comprises of the two products. The product number one is a financial commitment. Product number two, item number two is overseas portfolio investment. OPI investment, it means that those which are not been ODI, you may say it is a OPI. In this case, what the items comes to your mind? First of all is the debt, because that is nowhere considered in ODI we have seen. So listed companies debt, that is the OPI. You are holding the shares of overseas listed companies, that also falls under the OPI. But if these shares are being held more than 10%, it goes to the ODI and not to the OPI. And if less than 10%, but holding the control, it is ODI, but less than 10% straightway, it is OPI if you are not holding the control. For example, you are holding the Apple shares, you are holding the Microsoft shares, then these are called a OPI. It is neither been ODI or any other category of the transaction. It is a OPI transactions. OPI, it means that it has been defined here, friends. Definition has been given. You can read it at your leisure. The rule number 4 of OI rules, friends. Now, earlier we have seen, friends, that various rules are given, and then now it is a rule number 4. Very, very clearly says, friends, non-applicability rules and regulations relating thereto, nothing in this rule of foreign exchange shall apply to the IFSC, friends. So from where we are coming, the OI rules, these are all permissible transactions or non-permissible transactions or ODI transactions. This definition, whatever has been defined in our OI rules, that is not going to be applied if the transactions is being done by the entity registered with the IFSCA. It's very clear, friends. Therefore, there is the exceptions given in the rule 4 that OI rules are not applicable at all to the entity registered in a IFSCA. So rule 4 is very important. Remember, friends, that these rules, what we understand, what we discuss is not applicable. But when we are making a transactions from the domestic market, for example, I want to create a company in IFSCA jurisdictions. So therefore, OI rule is not applicable in IFSCA. But when I am making a transfer of money from domestic market to the IFSC jurisdictions, I am a resident of India, and therefore I should follow my OI regulations and rules. OI regulations and rules says that you have to follow various category of the rules, that 400% of your the network, or under LRS up to 2,50,000. So for forming a company or making a contribution, it is not that these rules are not going to be applied, because I am sitting in domestic market. In domestic market, these are applicable. But once the flight of money take place from domestic to IFSC jurisdictions, and from IFSC to, let us say, we want to make some investment outside. Now there is no regulations of OI applicable. My 400% of the net worth is not applicable here. I am not supposed to follow the OPI regulation. 50% of my worth I can make an investment. I can make the investment as much as I can. So here, once the money or currency has taken a flight from INR to foreign currency, now I am free bird. I can do whatever I want. There are no regulations applicable to me under the OI regulations or OI rules, friends. Therefore, important to remember that once it has changed the color from INR to the foreign currency, regulations and rules are not applicable. But till the time when I am in a domestic market, I have to follow these rules. And therefore, I cannot say that I want to make the investment in IFSC. No rules are applicable. Yes, rules are applicable, friend. 100% rules are applicable, but it is for a limited purpose up to the destination of the IFSC Gandhinagar. The next important point, friends, what we have to remember is that the overseas investments, it should be done through a ED bank. Here also it is ED bank, and other regulations are given, friends. Only important part is, friends, why this is important, friends? Because when I am making an investments from domestic market to the IFSC jurisdictions, I have to follow the OI regulations and rules. I cannot escape it, and therefore I need to have the understanding. So when I am referring to any schedule of OI rules, where it has been said that if you are want to make an investments into the IFSC jurisdictions, whether you are permissible or you are eligible, you are qualified, that has to be examined with the existing OI rules. And then once it is taken flight, then it's okay. So therefore, there are various categories of the various schedules are prescribed. Schedule 1, Schedule 2, Schedule 3, Schedule 4. So, what are the Schedule 1, 2, 3, 4, friends? Just briefly, I am touching upon, of course, your OI or the overseas direct investment session might have taken, but to just refresh your memory, it says that an entity may make overseas direct investment in the manner subject to terms and conditions to dealing with the overseas portfolio. So whatever you want to do, you have to do from domestic market to the IFSCA. Schedule 2 you have to follow, friends. Schedule 3 is dealing with a resident, because earlier these two schedules are related to a Indian entity, and you know that, friends, there are 4 different categories are described in the Indian entity. That is the you may say the company, LLP, partnerships. These are the various entities are covered in a Indian entity. These entities are making an investment from domestic market to IFSCA. Schedule 1 and 2 they have to follow. Schedule 3 is being followed if you are a resident individuals and you want to make the investment either in IFSC or overseas. But Schedule 3 you have to follow. So it is not that Schedule 1, 2, 3, it is applicable for only exclusively making an investment in IFSC. But IFSC to be considered as a part of the overseas jurisdictions, and therefore it is applicable for making investment to IFSC as well as to other foreign jurisdictions. So you want to create a company, for example, in a Singapore jurisdictions or Mauritius jurisdictions. What is applicable in a Schedule 1 for Singapore company creation or for Mauritius company creation is equally applicable to creation of a company in a IFSC jurisdiction. So therefore, this is the important part to understand that the Schedule 1, Schedule 2, Schedule 3 is very, very important. Schedule 4 is dealing with a person resident in India other than these two entities, that is the Indian entity and resident individuals. So like any trust, it would like to make an investment or some other entities which are not been clearly defined here or covered here. If they want to make, they have to follow the rules of Schedule 4, what has been prescribed. So therefore it is important, friends. The rule 15 is important, and that it says that a person resident in India may make overseas investment in IFSCA in India in the manner and subject to the terms and conditions prescribed in schedule. So if you want to make an investment, in IFSCA, friends, there is a specific schedule is given. There is a specific schedule. So if you want to make any investment, the schedule 1, 2, 3 and 4, they are important. But the other conditions over and above, then 1, 2, 3, 4, you have to refer to Schedule 5 as well. So for you, if somebody wanted to make an investment in IFSC jurisdictions, Schedule 5 is a Gita for you, Bible for you, or any other holy book for you, because that is the most important and sacred part of these rules. And therefore, Schedule 5 you have to understand well, because certain exceptions are given in Schedule 5. For example, I give you one example. I'm not going in detail, but I give one example. The example is that if your entity is not engaged in a financial business and they would like to make an investment in IFSCA. So in case of a Schedule 1, friends, in case of a Schedule 1, it clearly says that any business entity engaged in a financial products in domestic market and they would like to establish a company in IFSCA, they have to seek NOC from the regulatory authorities in domestic market. Other than if you are not dealing in a financial product, you need to establish any entity in IFSC and you want to make an investment or create a company, because the company which you are going to create in IFSC jurisdictions is purely a financial activity runner company. And in many cases, under Schedule 1, you are not allowed to make the investment into a financial activity runner company in overseas jurisdictions. But here it is an exception given. You can do that activity, making an investment, even then it is running in a financial activity runner company. Second, other than financial activity, if you are doing in this jurisdiction, domestic jurisdiction, then there is a condition under Schedule 1 that last 3 years the company should have made a profits. But here there is a special exception is carved out in Schedule 5. It says that financial, other than the financial activity runner company in a domestic market, so other than the financial institutions or NBFC or any other financial company, other than that, if they wanted to make an investment in overseas market, then profitability concept is applicable. But if they want to set up a company in IFSC, they are having a loss in last 2 years, even then they can open a company, they can contribute company into the IFSC jurisdiction, they can create a company. So this is the difference, this is the exception, and therefore Schedule 5 is very, very important for you, sir, friends. The next is restriction on acquisition of immovable properties outside India. I am not dealing, friends, it's not that relevant right now. A very small portion of this will come under the family offices. The family offices can make an investment outside India in a property without any restrictions. Without any restrictions. While I cannot acquire the immovable properties if I am in a domestic market. Suppose I am in a domestic market, I want to acquire the residential property in an outside jurisdiction, that is, let's say in London. I cannot do the immovable properties more than LRS 2,50,000 kind of things. I have to maximum in a per annum financial year I can contribute. I can buy in a joint name, but ultimately each person not holding more than $250,000, they can make a remittance outside India for acquisition of such property. Such restrictions is not applicable if you have a family offices established in this jurisdiction, that is the IFSCA. And therefore, the immovable properties regulations which are being restricted here, that restrictions is already been now done away in IFSC, and therefore this is what the very limited purpose I tried and put it here to explain you what is permissible and what is not permissible in two different jurisdictions. Then Schedule 1, friends, ODI, I explain you in a brief about this, that what can be done, what cannot be done, and what are the regulations applicable. I tried and list you for your reference, because this material is going to be shared with you. You can use your reference material. You can make a further study based on this and make a they make to make you an expert in this field, friends. This can be helpful to you, friends. The schedule 2, friends, here maximum, friends, you can see here that I can make the schedule 2 says that OPI by Indian entity, that is the overseas portfolio investment by Indian entity. An entity may make OPI which shall not exceed 50% of its net worth as on the date of the last audited balance sheet. A listed company may make OPI including by way of the reinvestment, and an unlisted Indian entity may make OPI only in clause number so and so of 1. So this is special schedule 2. For example, friends, you have a LLP in a domestic market and you would like to create another LLP in a IFSCA. The limit is prescribed is 50%. So your net worth not more than 50%, you can remit to create a company in this jurisdiction. But once the money has come here in a IFSCA, you can make a further investment of OPI outside India without any restriction. So whatever fund you have received, 100% you can make an investment outside. There is no limit at all, friends. So therefore, the schedule 2 from domestic to the IFSCA restrictions are there, friends, because it is applicable. It has not been, there is no, in a schedule 5, you may say that there is nothing been prescribed as a restricted item. Therefore, schedule 2's restrictions is continue. You have to follow it. And let us study the schedule 5 in detail. And then we will move to the other topics related to this. If a overseas investment in IFSC, a person resident in India wanted to make, an Indian entity not engaged in financial services activity in India, it means that other than the financial services activity company making ODI in foreign entity, which is directly or indirectly engaged in a financial service activity, except banking or insurance, who does not meet the net profit conditions as required under these rules may make ODI in IFSC. So it is permissible, I say to you, friends, that if you are not making a profit, even then you can make an investment in IFSC jurisdictions. A person in India may make contribution to the investment fund or vehicle fund in IFSC as OPI. So for example, friends, you want to make the investments in these jurisdictions. One AIF fund has been created and that fund has an object to make a further investment outside India. You can make this investment as an OPI. As an OPI, it means that your investment in your books of accounts will not be treated as the FDI. If you want to create a company, for example, in Dubai, then subscription to the memorandum that will be treated as ODI. But similarly, this fund which has been created in IFSC jurisdiction and you want to subscribe to that, because ultimately here also you are subscribing, but that will be defined as the OPI, not ODI, and there are some differences and some benefits and plus and minuses are there with regard to ODI and FCI, ODI and OPI, friends. The fourth one is that resident individual make ODI in foreign entity, including an entity engaging financial services, except in IFSC, if such entity does not have a subsidiary or step down subsidiary. So they can make, so you should not have again a step down subsidiary in India. Otherwise, it will be treated as money back going out and coming back again. So they will not permit that kind of the activity, friends. And recognized stock exchange, IFSC, shall be treated as the recognized stock exchange for the purpose of the investment part. Now, friends, what are the advantages? This is the background about the legal background or legal framework or legal regulations. I just try to give you the understanding on the subject. The important part, why we should choose these locations, why should we should have a business activity in this jurisdiction. So there are few attractions which are being listed here, friends, and that is the important to understand that why somebody should make an investment. So form number 3CA 3CB is not required, friends, because there is no such requirement in IFSC jurisdictions. For opening bank account in this jurisdiction, PAN is not required, friends. So somebody from overseas, for example, some UK citizen or US citizen would like to put in the deposit in a NRE account or FCNR account. In India, you have to give your address, you have to give your PAN, you have to give all of the details. But if you make this investment in this jurisdiction, there is no need of any PAN. For example, you want to make a direct investment into the mutual funds in India. Mutual fund people will ask you all their addresses, blah, 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 along with that Indian PAN number. But if you make an investment in a mutual fund which is located in these jurisdictions, there is no need of the permanent account number. Not only that, friends, these investments which are made in this jurisdiction in mutual fund, it make a further investment into the Indian mutual funds. So this will be treated as the catchment. That will be treated as the area where the pool of the funds are being made. It will be further deployed into the Indian mutual funds. Whatever the realized amount from Indian mutual funds will be credited to this, and there is a no tax, friends. And further, it is being paid to the investor. There is no tax. So it is 100% tax-free income can be generated without PAN number, without any restriction. This is the beauty of this jurisdiction. We do not have an idea to explore it, and therefore sometimes we are not aware and we are fumbling at that to what advice I should give to the client. Those clients which are wish to make an investment in a mutual fund, we should say that you come through the IFSCA. You need not have to open your, you need not have to obtain your permanent account number. You can make an investment, give your country's number, the whatever the tax identification number or other things. You open the bank account here without PAN. You open the demat account here, and you open everything. Your money will be credited again to a domestic market for the acquisition by these funds, and this fund will make a use of that. Once you want to withdraw this money, this fund they will pull out the money from the domestic market, they give it back to you, and no tax will be deducted at source under these mutual funds. But most attractive kind of things, one should explore it. This is the attraction and people are making use of it. Then the PAN is not required for making investments in, I told you that in any ETF or any units of the mutual funds. No TDS rule will apply for making payment to units located in IFSC with a few exceptions. So, like your unit is located in IFSC and you are charging the bill to the domestic entity. Domestic entity is not required to deduct the tax at source, which some exceptions are given. I'm not discussing that, but keep in mind it is again a beneficial provisions. Non-resident investment in a feeder fund. So what I explain you is a feeder fund. That feeder fund registered with IFSCA is a pass-through entity. That feeder fund will make a further investment in domestic market, and that makes a tax-free investments. Business income earned by registered unit in IFSC is exempted under 80LA, friends. So there is a huge amount of the benefits are available under section 80L, and one should take a benefit of this. So any business income earned by the registered unit in IFSC, they are not supposed to make the payment. They are supposed to make the payment of the MAT. MAT is again, but if you choose the registration under the company which is 115 BBB, then in that case, even MAT is not applicable, and therefore your income is 100% tax free. So you have to plan, you have to choose it. After completion of 10th year, there is a one more formula you can apply, and you can avail the benefit to be continued. But it's a very excellent provision. You should try and explore it this to establish a financial services hub, financial product hub in this. If your client is dealing in a overseas jurisdictions, they may have the, for example, somebody has developed the mobile app or desktop app. They are giving us services related to that where the currencies are being exchanged or trade is happening or balance payment is happening. So payment settlement method is happening on that app. So they should establish their unit in this jurisdiction, and it will be huge benefit for them to avail these 100% tax preference. No capital gain tax, friends, as you are aware. If the company listed in these jurisdictions, if you invest the unit of IFSC, invest the money in that listed security and sell in that jurisdiction, no capital gain is to be payable, no GST is payable, no stamp duty is payable. So there are huge attractions in this jurisdiction, friends. Now let us come to the kind of the various entities which are being created in this jurisdiction, friends. I will come little late. I am giving you the some brief idea about this. There are three literatures which has been available from IFSCA and GIFT City. I downloaded it. It's a part of my presentation that I will give you. But to give a basic understanding that which are the entities can be created in these jurisdictions and what are the benefits can be availed by those units in this jurisdiction, friends. So that is called a fund management entity. It is called a FME. When you are reading this, you may read that the fund management entity. Fund management entity in the sense that it is an entity. They are basically regulating the funds. They are regulating the funds. So which are the funds they are regulating, friends? So there are three categories of the fund management entity, friends. So it's an authorized entity, retail and non-retail kind of three fund management entity you can create. What is the legal form of the entity? You can create a company, you can create a branch, you can create a LLP. So, for example, you would like to do the AIF, Alternative Investment Fund. So, Alternative Investment Fund, if you would like to do it, then what you have to do is that I'm giving you the basic idea. There may be a couple of the scholar professional brothers, maybe there who knows better in an alternative investment fund. But for the benefit of somebody who is not having an idea, I'm just giving an idea that these entity which have been created, let us say that you have created a legal form of the entity, like for suppose you created a LLP. So LLP is being created in these jurisdictions. This LLP is being registered with the IFSC. IFSC give you the license that you can now manage the funds. So that is the basic requirement. This is the entity which is known as fund management entity. Now they can create any fund or any scheme. For example, this LLP create a one trust or some other trust can be created. This trust where lot of contributors are there. Trust is not, I am not talking about the charitable trust. I am talking about the business trust. So business trust is created for the purpose of the making investment in overseas and the domestic market, both are permissible. So they sponsored one trust, they contribute, this LLP may contribute as the contribution in this particular scheme or fund. And there are, let us say that 100, the investors are there, they are contributors. So this fund is being monitored, supervised by these particular things. Some trustees are there, they are supervising the activity of the investments. They are looking or taking care of the funds which are lying in a trust. And the LLP which has been created, which is known as the fund management entity, they look after the all other administratives, the compliance is part, investment strategy, all these things they can have in their books to monitor and supervise and control the fund activity. So here is the fund management activity and fund can be created. Both are different entities, but ultimately it is being managed by the fund management entity and therefore it is known as FME. And this FME can be a company or LLP or branch. Authorized FME may be for the purpose of the venture capital or startup or family investment funds. So this entity can be treated as the authorized FME if you are creating a venture capital, if you want to create a startup fund, if you want to create a family investment funds. So family investment fund, friends, is nothing but a group of person who are a family. They can put up their personal wealth in these jurisdictions by creating some entity. For example, one LLP you have or one trust you have in a domestic market. It's a family trust. It is a LLP is owned by the family only. That LLP or that trust create a one more LLP or more one trust in this jurisdiction, that is the IFSC jurisdiction. That creation of the trust has to get registrations or license from the IFSCA. Now, there is no further requirement of creating a fund or scheme because they themselves are bringing the fund and that they are the fund management entity. They themselves are also the fund. So they are the self-regulated organization. So family investment fund, but they have to get the license under the category of the authorized fund management entity. Similarly, there are registered FME, that is the non-retail, where you can do a portfolio management services, then REIT, then investment ITs, so private investment. These are licenses required for carrying out these activities, and that FME, if you want, for example, you want to do the portfolio management services. Portfolio management services in the sense that the person who is advising to the various investors by collecting the money. In a domestic market, friends, there is a limit of 50 lakhs minimum. So each individual or corporate can contribute. The portfolio management company supervises and advises their investment part and they give a return on investments. They are holding only for a limited purpose the authority to monitor and supervise. Otherwise, everything is controlled by the person who is making an investment. So that portfolio management in the services company can also be created in IFSC, and from foreign jurisdictions, lot of investor can be brought in. They can make an investment in a domestic market or in a IFSC jurisdiction, listed companies or listed securities, listed bond, masala bonds, etc. And they can monitor these, they can supervise these, they can control these, and they charge some fees. That is the management fees. But their registration is done under the registered FME. And another category also is a registered FME, is a retail. That category of the entity can create a REIT investment and it is on a open-ended basis or retail basis or restricted scheme basis. So they have to get that. This is the type of the licenses given by the IFSCA, and that you can hold these licenses, friends. Now, after creating these entities, for purpose of these, friends, the PMS, there is no further requirement of creating a pool of the funds. If you are creating a family investment fund, FIF, no need to have the further pool of funds. But in case if you want, then you can register yourself as the registered FME non-retail, and further you can create a various scheme or funds, friends. So there are three different kinds of the funds you can create. So fund management entities, their function is to monitor, control, supervises the investment of the scheme. Scheme or fund, whatever you say, there are two names are popularly used in a market. So you create a fund or you create a scheme where a lot of investors are coming and putting up their money, and then you are monitoring it. So therefore, in an alternate investment fund, friends, there are three categories. The one category that is called AIF category 1, for the purpose of if you are creating some pool of investments from various investors, the investors can put in their money, and this fund is known as the category 1 fund, that is the AIF 1. This fund can put in money further into the startup or venture kind of things or innovative companies or specialized situation fund or infra. They can put in their money. So this is called a AIF1. Why this categorization has been made, friends? Because under category 1 and category 2, any income earned by this scheme or by this fund, AIF, it will go straightway in the pocket of the investor as if the investor has made a direct activity. So it is called a pass-through entity. But in case of a category 3, the income which is received by this fund or by the scheme, they have to pay the taxes by making the investment in a domestic market in our country under the Indian Income Tax Act, and they have to pay. Investor received the money in their hands at tax free because assessment is being done at AIF 3 level, and in other two cases it is a pass through. Therefore, assessment is being done in the hands of the investors directly. Therefore, the categorization is very important. In case of AIF2 and AIF3, there is one more difference, that in case of a AIF3, they can make an investment into the listed, unlisted derivatives. Derivatives is a product, friends, as you know. So derivatives, that the future and options activity can be done by AIF3. It cannot be done by AIF2. So if you have an object of making an investment into a derivatives or future options may be related to a interest future or options or swap or any other thing. There are various products. So various products you can make an investment, but the pool of the fund, the scheme which you have created, it should be designated as the AIF category 3. It can borrow it. It can leverage their fund. For example, it is a 100 million fund. They can borrow 20 million from the market, from the banker, from the other party, and they can make an investment of 120 million into the either domestic market or in IFSC jurisdiction itself, various funds. And therefore, borrowing is only permissible under the AIF3. Under AIF2, no borrowings are permitted. Under category 2, yes, you can make an investment into a listed category, unlisted category, bonds. But the kind of flexibility what you have under AIF3 is not there in AIF2, and it's a complex business strategy in AIF3. So this is called a fund management entity, friends. The one more category can be created in these jurisdictions, just like NBFC, what we create in a domestic market. It is similar to that. The name is not been given NBFC. The name is given is a finance company, friends. So under the name of the finance company, the investment is being made. They can lend the money. They can make a commitment. They can make a guarantee. They can also give the credit enhancement, securitization. All activity can be done by the finance company. It can make investments in subscribing, acquiring, holding and transferring security or other instruments as permitted by the authority. They can do that investment part. So the finance company can be created for the purpose of the investments. Factoring and forfeiting, receivable activity they can do. You know that, friends, what is the forfeiting and factoring? Some receivables are there. Those receivables may receive the money over a period of time, but they are giving this money in advance by getting a discounted this value, and this discounted value is nothing but a factoring and forfeiting of the receivable. So that lending can be possible under the finance company. Buy and sale of derivatives can be done by this as a client. So it means that whatever money they have, they can make an investment in a derivatives for themselves. They cannot do the derivatives activity for others. If you want to do the activity for the others, the AI which I have suggested that you should create, here only for themselves, this speculative activities to cover the futures volatility of the currency, you can do it is permissible activity. Then other is you can have the global and regional corporate treasury center. This is very, very important concept, friends. I would like to give you little more background and understanding on this. Friends, today there are few inquiries we are handling and doing implementation that large corporates having about more number of the overseas offices. For example, the Indian conglomerate having an office in Brazil, in Netherlands, in Singapore, and UK. So these are all subsidiaries either or associate companies. They have their own surplus money there. They have their own requirement of the funds. Now, if you want to do this activity from your holding company, here in holding company, we have restrictions. We cannot make money directly to them time and again. There is a restrictions of 400% of my capital. There is restrictions what I can give a commitment to the extent it should fall as a part of the commitment. So because of all these regulations, because we have shortage of the foreign exchange and therefore regulations are in place. We are not criticizing that regulations, but to overcome such things, what you can do is that you can establish the corporate treasury centers in this particular space. Currently, today, lot of large corporates, conglomerate having a treasury office in Singapore. They have the offices in Dubai. They have the offices in London. Now, instead of putting their offices in that jurisdiction, you can create this treasury office in this. So let us say that Singapore has a surplus and UK company need money. You can take this money because these are the other jurisdiction other than the India. It is 100% currency convertible areas from London to Singapore to Dubai. They can make the investment intersea, but ultimately the parents will have a control on the funds. They will prefer to have the treasury office in some of the jurisdictions, so they can pull up the money from one jurisdiction and pull out the money to other one, and they can keep it borrowings and then lending. This activity can be done. So this treasury management can be done in this jurisdiction. So I was giving an example that Singapore company and UK company need money. They can give interchangeable. There is no problem. But if it is through this, the treasury office will make the investment judiciously. Their board will make it call properly. Decision making process will be there. So this kind of the concept is now emerging in this jurisdiction. You can create these corporate treasury centers in this jurisdiction. Couple of you will see that in a next 5 months, 6 months, couple of corporates will have the offices in these jurisdictions. You can do a activity of the ship leasing, friends. Ship leasing activity, you cannot do the cargo buying and selling. You cannot have the kind of a buying and selling contract execution in these jurisdictions. It is a ship or aircraft buying or leasing, or you can do a activity which are known as the operating lease. So we will come that what is operating lease and all, but you can do that activity. So primarily, if it is a leasing activity, suppose you buy some ship from the overseas, and you establish one company in these jurisdictions. Currently, we have done couple of things in the aircraft space, and we have done in a one passenger ship. So they buy the ship in an overseas market. They purchase it and they give it to somebody on a leasing. They pay the lease rent. This buying in their name in a foreign exchange and again giving on a lease. So this leasing activity is permitted in this, and this will be treated as a financial product, and that financial product is put under the basket of the finance company. So this activity you can do, that is the aircraft or ship leaser you can work upon. Even you can give this aircraft or ship for a domestic use. So there is no restriction that you cannot borrow this money or borrow or you cannot have an arrangement to buy the ships from the overseas and not to give to. You can create a one hub, and that is in IFSC. You can lease this. You can collect the leasing part. You can pay the money to the person who has given a ownership to you. So that activity can continue in this jurisdiction. So aircraft and ship falls under this. There is no separate category. If any comes to you for a discussion, you go to the finance company and refer this. Then the financing services platform is also covered under this platform, friends. The holding company concept is also been developed in this IFSCA. It is subject to the what kind of the activity you want to do it. The IFSC will give a special permission to you, and that is also been covered, friends. In case of finance company, there are core activities and non-core activities. What I explained earlier is all these were the core activities. And in a non-core activities, friends, the operating lease of any product or aircraft or ship or any other equipment is may be specified by the authority. What is the difference between the finance lease and operating lease? In case of a finance lease, friends, we might, as a chartered accountant, understand the hire purchase concept. So when we give it on lease, at the end of the term, they have an option to buy that product. So they will make the payment to me. I can buy that product. That it means that ship is given on leasing. The lessee has a right to acquire this product or acquire this equipment or acquire this ship, and they may make a payment to the IFSC entity, and I get rid of this ownership. I fully paid this money to the my supplier. I can do that, but that is called a finance lease. In case of operating lease, there is no option. It is a continuous the rental kind of things which is known as the operating lease. So operating lease activity also can be done, friends, but that is not the primary or core activity under the IFSCA finance company, but it is a non-core activity. And any other activity permissible under these, friends. This is the another segment, friends. This segment is very upcoming, and a lot of inquiries and lot of things are happening in this space. A lot more people are looking for establishing their offices. Chartered accountant, you may also look into this opportunity, or some of your clients, they are doing this activity. You can suggest them to explore this jurisdiction, friends. You can do now the bookkeeping activity there, friends. What is the bookkeeping? It's very clearly define it. Don't make your own interpretation. It says that classifying and recording transactions, including payroll ledgers, in terms of money or other units of measurement in the books of accounts and other related transactions. So recording the transactions, writing a books of accounts is a bookkeeping. It is not accounting. It is a bookkeeping under the definition of the IFSCA. But they have given one explanation that bookkeeping services under this clause do not include the payroll and taxation services. So somebody is doing a payroll services only. So payroll services is not being covered in a bookkeeping. So somebody just in a large organization like 5,000, 10,000 employees, the special activity is assigned to somebody to generate the payrolls, the leaves and their other benefits and all the things they will look into along with the HR. So this activity is not being covered in a bookkeeping. So as on today, it is not permissible activity. Payroll generation. Payroll you can create. Payroll you can have a ledgers. You can write it based on the payroll. So based on payroll, writing a books of accounts is permissible, but payroll itself is not possible under the bookkeeping, and therefore mind well, it is not a permissible. Bookkeeping is just merely a recording the transactions, may be measured in terms of money or other things. It is permissible. So now who are your clients? Your client could be from UK, from USA, from Australia, anywhere. You can do a books writing activity in these jurisdictions on 100% tax-free income in these jurisdictions. There is no tax. Whatever you earn, it is 100% deductible under Section 80 LA. So writing a books of account somebody is doing in that jurisdictions, you can pitch them, you can market them, you can contact them, and there he can be your potential clients for doing this activity. The second category is accounting services. That includes accounting. What normally we say that he is doing my accounts. No. Here accounting, it means that reviewing annual and interim financial statement. So you do a review of it. You create or collect the informations to make the composition of the informations. You can make a financial statements for understanding purpose. You can make a income statements. You can make a balance sheet. You can make a other financial information. So writing books of accounts, if somebody is doing, they provide you the information. Based on that, you can create annual reports. You can create a balance sheet. You can prepare a financial statements. You can prepare a director's report. All other things you can prepare under the accounting services. So that is also a big work going in our country. very competitively. So if you are dealing with foreign clients, there are a lot of, they are outsourcing all this activity. And if you have good contacts, you should explore it and put it your unit in these jurisdictions and do activities. Then taxation services, friends. There are a lot of chartered accountants doing a US CPA work kind of things or some other taxation compilation services. They are consulting as a not competent we are, but we are making a tax returns preparations work and all the things. So that is the permissible under this category of the BATF regulations. These are called the BATF regulations. So under BATF, B stands for bookkeeping, A stands for accounting, T stands for taxation, and F for financial crime compliances. Now, financial crime compliances means what, friends? So, friends, this is the jurisdictions where the crime should not happen, financial crime. We are not discussing about any social crime or any other thing. So, money laundering kind of activity should not happen, or the cheating kind of activity in a financial transaction. So, therefore, some KYC you need to do, or some anti-money laundering kind of compliances you have to do. You have to do the countering financing terrorism, CFT kind of things. So whether he is from a FATF, that is the Financial Action Task Force, whether he is from that country which is approved by under the FA, he should not be under the grey list. So if somebody is in a grey list and making an investment in jurisdictions, India will not prefer to have. So therefore, when somebody is opening a company in these jurisdictions, the IFSC authority will ask him that you give me a certificate that you are in a FATF compliant country. You give me that you are not engaged in any money laundering. So there are various softwares are available, data are available. They identify, they trace the name of the company, name of the promoter, full background. Just like in a credit rating, what we do is that there is a bunch of the informations they have and they give a credit score. Here, there is a bunch of the informations available under this. Their country's perspective, the party's perspective, their past dealing, everything. So this kind of the crime compliance services, you can be provided under this and you can get your registered under the BATF regulation. So these are the four categories. They are well known and famous for these, friends. Now coming to a conclusion, coming to an end in another 10 minutes time, friends, and then we will have a question and answers after 5-10 minutes. Just give you some more backgrounds about these, friends. Fund regime in GIFT City, I have already explained you, friends. Now, this fund regime in GIFT City, friends, what I have explained you, it is a brochure they have given, and they are explaining you how to create a fund in these jurisdictions. Lot of write-ups are there, friends. It's about some 12 pages pamphlet is there. I'm going to share with you for your study purpose. Whatever I have explained you, authorized FME, registered FME retail, they have categorized these various FME, their experience, what is the category, which are the funds can be established. So all these are things they have given in this brochure, friends, and you can refer at your ease. There is a fintech in GIFT City, friends. So fintech and techfin is the terms which has been coined. What is the difference between these two, and how the clients who are making inquiry, we can pitch to them or give an explanation whether they are qualified to have the unit in these jurisdictions or not. So friends, I would give an example that, for example, the Google Pay. The Google Pay is a fintech. So, sorry, TechFin. So Google Pay, it is because they have the facility, and that facility, they have the database. And based on that database, they are making a use of the technology for the purpose of the making a settlement. But for example, suppose you are Infosys or you are Wipro, and you develop some software for the banking transactions, for monitoring, for lending, for borrowing. This kind of app you develop it. You are a financial company engaged, or you are a software company engaged in a financial activity kind of things, or financial software development activity. You are a fintech. You are a fintech. But if you are a technology-based company, now, for example, how if you are well aware about this activity, what you can do is that, for example, some inquiry come to us. What they were doing that they were providing the services of the evaluation of the insurance policy. That whether insurance policy issued by company A, company B, company C, which is the beneficial. So they prepared a program which give you the exhaustive kind of things. Very good package, excellent detail. Now you can make a choice of it if you go to that app. And they come to us, they said that whether we are qualified. I said, you are not qualified. But I have given one suggestion to them. What suggestion? I made a suggestion that you try and connect your bank app to the financial gateway of the insurance company. So technology I am using, finance was missing. So I suggest him that to how to attach to the finance. So financial transaction possible through their app, they can go to the gateway of the whichever is preferable, the insurance company to the client. They may click there, they make a payment of the premium and they get a receipt. So now entire package is completed. They were giving the half of the services. What they have to do is that they have to extend this to the only financial gateway and tie up with them. Financial gateway, they make a payment, they receive the, so entire foolproof thing they are getting it. So this kind of the innovative things, if you can do, it is known as the tech fee. So technology further enhance to the finance, ending with the tax fee, that activity is also permissible and you will get 100% exempted income in this jurisdiction. If you are developing any settlement platform, for example, so somebody is hedging into the various derivatives and those derivatives from your platform, you develop a software where they can enter the transactions and they can enter into a final settlement. That platform you are providing, it's a tech fin, it's a fintech. So fintech and tech fin, that is a terms which has been coined by the IFSCA, and you can make a investment in that areas. SIP leasing, friends, I have adequately explained. One important aspects I would like to explain here is that in a case of a ship leasing, friends, suppose you have already a leased ship in a domestic market and you would like to transfer this to the IFSCA and again you would like to lease back to the domestic market, it is not permissible activity. But your ship is leased somewhere outside and you want to transfer the base of that lease to IFSC and again you would like to transfer the lease further to the domestic market, it is permissible. So you are creating a one layer here. Instead of, let us say, Netherlands, it is transferred here. Instead of Ireland, it is transferred to IFSC and further you can lease to this. So from taxable to non-taxable to again taxable, it is not permissible because you are camouflaging the transactions. But if something is already outside and you are using it, that outsider is coming to the Indian jurisdiction, it is a welcome move and the government allow that kind of a transaction. By way of the clarification, they have said that we will permit you the transactions, friends. Now, various permitted regulations, friends, I have given for your reference only, that there are banking regulations, fund management, capital market intermediaries, then bullion market, market infrastructure institutions, payment and settlement. All these are the regulations, friends. So if your client wishes to establish, you go to this particular regulation, see what are the requirements, what are the criteria, and you can then choose it. You can establish the company or you can establish the entity, whichever is required, either as a finance company or either as a FME or either as a the category of FIF. You can establish it according to the requirement. So try and understand this and you create a company. There are certain frameworks which are not being given a regulation, like BATF is a regulation. BATF is a regulation. But like in a shipping, it is a framework. In a TechFin and FinTech, there is a framework. So framework is given under some regulations, and sometimes the regulation itself is given. So you have to identify that if some item falls under the regulation, then you have to refer to the framework, and some falls directly into the regulation, you have to read the regulation. That is the important part you have to keep in mind, friends. So with this, I conclude my today's session, friends. Thank you for your patience hearing. I really love to have your comments on this, whether you enjoy it or you like it or not. And any further queries, I'm happy to answer, friends. Let us go one by one. If you have any comments or query, I can just see the chat box and then come back to you and answer it, friends.
Hello.
Yes, Abhishek.
Sir, talking rights are given to the participants so they can raise their query on one-to-one basis, sir.
Yeah, no issue.
Okay, sir.
Am I audible?
Yes, sir. Yes, sir. Sir, meanwhile, you have to solve the queries asked in the chat box, sir.
Pradip sir, good afternoon. Can you hear
Good
me, sir?
afternoon. Yeah, yeah. Speak little loudly. I am not able to hear much clear.
Sir, can we ask our NRI clients to purchase any mutual funds or shares with the agents that are having office in Gift City? Is it beneficial for them?
Come again, ma'am.
Sir, we are having some NRI clients for whom we are doing ITR filing in India.
Okay.
Can we advise them to hold investments with DP agents in Gift City? Is it
Yes,
beneficial for them?
100%. Yes, 100%. I can help you out. You can have my number. So definitely we can be in touch for that matter. I can definitely help you out.
Oh, okay, sir. Thank you. I will get in touch with you, sir.
Yeah,
Thank you.
we have office in Gift City, so we
Okay.
can definitely help you out. Whatever other details you want or any other things you want.
Okay, sir. Fine.
So there are some questions. By the time I will take it, friends. Examples of the financial product. Friends, the example of the financial product itself is like you are doing a derivatives business. Derivatives include the futures and options. So these are the financial products. Like trading a shares, that is a financial product. Uh, Doing a lease transaction, that is the financial product. So these are the examples of the financial products, friends. How listing is more beneficial at the IFSC. Friends, in IFSC, the listing is more beneficial in terms is that there is no capital gain tax is payable in that jurisdictions. So anyone who subscribe or who trade on a IFSC exchange and they deal the transactions, they enter into a transactions, it is more beneficial to them and therefore, as a investors, it's a capital gain free. And as a company, if we want to get them to be listed in a IFSC, where you have to go to the various other jurisdictions for raising the finance. Here you can raise the finance while sitting in India itself. So, like for example, I give you an example. In 2004, there is a company called Make Money Organics. They first listed their companies in Singapore rather than they listed in India, and they raised the funds there in form of the various products. But now same thing is possible here. Recently, Adani has raised the funds by issuing the masala bonds in that jurisdiction of 5,000 crores. So listing of those financial products will give a more benefits to them. Lot of investors, provided your company is having a good products or good track records of the profitability, listing makes a lot of difference because the compliance cost is also very less as compared to other jurisdictions. In other jurisdictions, you have to keep continuing hiring the lawyers. They are charging on an hourly basis or minute basis, and all other compliance services are also very expensive, including infrastructures. So that cost also been minimized if you have that offices here in this and do a listing here in India in IFSC friends. The next question is that unable to see outside. Okay, is the city, GIFT City considered as outside? Friends, let me give an idea that GIFT City is geographically in India, but for FEMA perspective, it is outside India, not for income tax. Income tax, all the laws related to the taxations. For example, LLP created in IFSCA, that LLP also assessed as the partnership firm what the LLP assessed in a domestic market. So company established in a IFSCA, they have to file the same return what the ITR is filed by the domestic company. So for income tax purpose, it is not only for the purpose of the FEMA, because that's why I said to you that it is a limited purpose or limited meaning of that 100% convertibility of the foreign exchange or foreign currency. It is outside India. Otherwise, it is within the India. So GIFT City is considered outside India for the FEMA purpose only. Thank you, sir. It is a great session. Sir, not related to topic. What is export payment is received foreign company paid from Indian account in INR and exchange. You cannot make any payment in INR against the export products, friends. It's a restrictions is imposed, and kindly refer to a master circulation, master directions on export, friends. So that will give a more idea about it to understand that how to settle that if you don't have the foreign currency on the hands on the other side. There are various methods. If it is receivable within the overall period of 9 months or 6 months or extended period, you can convert into the equity. So problem can be solved. New equity can be issued by the buyer in your favor if they have the cash crunch and all. So there are ways and means of doing it. So kindly refer to that. That will give a big idea to you, friends. Priya is
Sir, I have a question regarding
Yes.
what are the new opportunities, what are the examples, practical case scenarios wherein chartered accountants are like you have opened office there, how we can grab that opportunity and open offices there. So if something practically you can tell some informally that how these opportunities
See,
can be.
basically, friends, I got your point. The having an office in that jurisdictions is only beneficial when you have the foreign clientels, or you are able to tap the foreign clientels, or you have potential business within the foreign clientels, because that jurisdiction is dealing in the foreign currency only. The expenses as compared to the domestic market or domestic area is much more higher and expensive. So yearly expenses normally is envisaged somewhere around some 30 to 40 lakhs rupees per annum. So if your practice is around more than 1 or 2 crore rupees or 3 crore rupees, you envisage, then you should open the office there. Otherwise, you can bring them work. You can associate yourself with the established player there who are having offices. They are doing it, and you can enjoy the benefit of doing the work with them. So rather than making a office a venture, initially you can associate with somebody that will be more beneficial. And if you have the clientele or you have the business on hands, certainly that will give you a more leverage and more benefit, because the kind of the earning what you are making there is not you are able to make in a domestic market. Domestic market, people are hesitant to pay 5,000, 50,000 payment, but where the payments in that jurisdictions in dollar and that also in a thousands and plus amounts. So it has always been good to have a presence there. But if you are not able to have the direct benefit of this, you can associate yourself, friends. Mr. Arora, am I able to give your answer?
Yes, sir. Thank you.
The ODI is permitted to a resident individual in a GIFT city. What is the limit? Friends, ODI is permitted to a resident individual in a GIFT city. GIFT city directly, you cannot have the ODI kind of things, friends. Only the permissible entities can make an investment. And therefore, whatever I have listed the entities, wherein you can make an investment and you can have a ODI kind of things. Individually, you cannot do that. What you can do here is 2,50,000. You can do the same thing, 2,50,000 there. But if you have entity there, and if you transfer more money to there, you can have a benefit of making a more ODI outside India without any restrictions. Mr. A and B are Indian resident under LRS scheme. They have remitted 1,000 US dollar. You are incorporated company in UAE making profits and a surplus of 1 lakh US dollar. The US company wanted to invest in the US dollar based fund in GIFT City. Yes, they can make the investment. There is no problem. The UAE company where you have already invested, it is not a round tripping, but it is a genuine investment and it's a foreign jurisdiction. So no need to bring that money in India. You can have that company, UAE company, can make an investment in IFSCA. They can take money back again in that jurisdiction, friends. So it's a good understanding of IFSCA, friends, from your sides. Hope, friends, you have enjoyed the session. I am not sure that how much you have understand and enjoy it. It was little fast, I know, but as you know that a lot of things I have to cover up, and therefore my speed was little high than the normal one. But have you enjoyed it, friends? Really comment and then let me know it was good, or have some deficiency. You can point out, sir. There is no problem. One more question has come. Can you explain the capital gain taxability? Friends, I said to you that if you have invested the money in a IFSC listed securities, if you buy, sell, trade, anything you do, that is the non-taxable, and no capital gain tax is payable in that jurisdiction, friends.
Hello.
Yes, Abhishek.
Sir, maybe there are no more queries from the participants.
Yes, yes. Yeah, we can close it. Hope you have enjoyed and the participant might have also enjoyed. And
Yes.
thanks for your opportunity giving to me to interact with the participants, Abhishek. To
Yes,
the
sir.
Institute of Chartered Accountant, my thankful and regards to the Institute.
Yes, sir. Thank you. Thank you so much, sir, for sharing your knowledge.
Yeah, Abhishek.
Yes, sir.
Hello.
Yes,
Yeah,
sir.
Abhishek, I have a question regarding this examination. Means, is there any email or means information for the
Yes, sir.
participants that
Yes,
when
sir.
it will happen and how it will happen and what need to be covered?
Sir,
Something
please
guidance
text me.
upon that.
Sir, please text me on WhatsApp. I will share you the details over there. Rest officially we inform you over the mail, sir.
Somebody will ask one last question that MSME benefit. There is no concept of MSME benefit in that, friends. So let us conclude that, Abhishek. Hope.
Yes, sir. Yes,
Yeah?
sir. Thank you.
Thank you so much, friends. Thank you. Bye. Thank you.